2025 has been a tough year for the housing market. A weak economy, higher taxes, and budget uncertainty, they've all led to a kind of stagnation. Transactions have been low and house prices barely increasing. In fact, with inflation over 3%, real house prices have continued to fall. And this is actually a big underlying story of a UK housing market. Real house prices have come down since 2022 and are even lower than 2007. But with a budget less impactful than many people feared and the prospect of lower interest rates, what does 2026 hold for house prices in the UK? Well, pessimists will point to continued economic weakness, rising unemployment. The expectations that average earnings will barely increase. The OBR predicts just 0.2% growth in 2026. Not only that, but despite the falls in prices, UK house prices still look unaffordable. House price to income ratios have come down from their 2022 peaks. But for many buyers, buying a house is still very much out of reach. Now, while some hope for interest rate cuts, pessimists will point to the persistence of UK inflation. The banks still predict it will be high next year, and that's a warning that interest rates may not actually be able to fall that much at all. The Bank of England is still forecasting inflation will remain elevated, and therefore homeowners face the prospect of continued high mortgage costs. Despite a decline in interest rates in recent months, homeowners still pay a relatively high share of their income in mortgage payments. Interest rates may be lower than the 1980s, but because house prices are so high, it's still a big cost, a big barrier to getting on the property market. However, for those predicting a crash in 2026, unless there's a really unexpected event, it's really very hard to see. But first, a quick look at how past forecasts went. At the end of last year, house price forecasts for 2025 ranged from 1% to 6%, and it's looking like house price inflation of 2 to 3%, so not too far off. However, the national figures mask a big regional divide. Cheaper areas in the north saw very strong house price growth. Liverpool 10%, Sunderland 9.4%. But the expensive areas in London and the southeast, which were hit by stamp duty, higher interest rates, saw really quite big drops. Westminster down 11.5%, City of London down 9%. Now, a very big important factor for future house prices is the reduction in mortgage interest rates since 2024. It means that many people remortgaging are no longer seeing that kind of big shock in mortgage rates of recent times. And furthermore, we're really quite likely to see another interest rate cut this month. Capital Economics suggests that in 2026, UK rates could fall more than previously expected. Wage inflation is slowing, service sector disinflation continues, and furthermore, budget measures will reduce the inflation rate by 0.4% next year. Although a minimum wage may counteract some of this, it is worth bearing in mind the UK remains an outlier in terms of interest rates across the G7. If UK rates were to get closer to ECB levels, it would almost be like a return to the rates of the 2010s, a period of booming nominal house prices. And here is an interesting speculation. For 12 years, the UK had virtually zero interest rate because of economic stagnation. Now, COVID, Ukraine war, and Liz Truss temporarily blew this apart, but many of the forces that led to those ultra-low interest rates for a decade have not entirely gone away. The prospect for economic growth in the rest of the decade is really pretty poor, and higher taxes towards the end of a parliament will slow down economic growth. And in fact, the OBR's growth forecasts rest on the assumption of significantly lower interest rates to counteract the effect of taxes going up. Now, in 2023, with 2-year fixed rate at 6%, a mortgage of £250,000 would cost you £1,610 a month. But today, with those 2-year fixed rates at 3.8%, that falls to £1,292, which is significantly more affordable. Also, bear in mind that since 2023, nominal wages have grown by 11%. Yes, the housing market is still very expensive, but there has been a relative improvement in affordability in recent years. And whilst mortgage payments have been coming down, the cost of renting has been very much going up. Average rents in Great Britain have risen by 30% within 4 years. Which would you rather? Pay an average rent for England of £1,399 a month, or pay £1,292 for mortgage payment on a mortgage worth £250,000? To me, it's a no-brainer. And don't forget that inflation will erode the real value of your mortgage, but inflation will push up rents. With that kind of calculation, don't worry about what happens to house prices. There's a strong case for buying a house if you're going to be living there for a long time. Now, back in 2022, when I started to get into YouTube, it was a pretty exciting time for the housing market. Interest rates tripled, inflation 10%, and on top of all that, record unaffordability. And I made quite a few videos about how house prices were going to fall, and they did, a little bit. But the nominal fall was perhaps less than you might have expected given that jump in interest rates. And the big question is why? Well, one reason is that it's not just income that is used to buy houses. Wealth, inherited wealth, gifts from parents all play an increasingly important role in the UK housing market. It's why so many people can afford an average deposit of £144,000 in London. And there's a lot of wealth transfers to come. As the boomer generation pass away and pass on their value of their houses to their children, you can expect a larger share of this wealth to be recycled back into the housing market. Now, for those outside that inherited loop who can't rely on parental wealth, it is a deeply frustrating experience. But this recycling of wealth explains at least some of the higher house price to income ratios. And also, as well as inherited wealth, British households have been quietly increasing their levels of savings. All the pessimism in the economy, we're not spending, but we are saving. And it means that in theory, households are in a position to afford much bigger deposits for a house than, say, in the past. Now, what about the budget? Will the mansion tax have any effect? Well, not really. It affects less than 1% of houses, and 80% of these are in the southeast. However, the high values of stamp duty and new council tax bans will continue to be a drag on prices at the top end of the market. And bear in mind that more are getting dragged into paying stamp duty, which is a bit of a cost of buying a new house. Also, the mansion tax could lead to some greater price compression with more demand for houses just below the 2 million threshold, but it really isn't the kind of thing to move national prices. Now, what about the effect of supply on price? A big factor behind the surge in rents was very high levels of migration after COVID. But so far this year, we've seen a really big drop in migration as government policies to restrict migration come into effect. And slower population growth will, to some extent, moderate house price growth. But I think it'll have more of an effect on the rental sector and fairly minimal effect on house prices. Now, of course, the government did make a big target of building 350,000 homes a year to try to make houses more affordable. Of course, they're not going to meet this target. But anyway, it will take a very long time of extensive house building to significantly lower house price inflation. As a rough rule of thumb, 1% increase in supply might mean house prices 1% lower than otherwise. But we're not going to get a huge surge in supply anyway. So at the end of the year, what do forecasters say about 2026? Well, the OBR is again rather conservative. House price growth of 2.5%, pretty much for the next 4 years. And basically, with inflation at a similar rate, zero real price growth. Others say anything between 2% and 5%. And I would forecast towards the top end of these forecasts, growth of around 5%, which would mean for the first time in a few years, we could actually have positive real increases in house prices. The main reason for me is the decline in the cost of mortgage payments, the rise in savings, the rise of wealth, and combined with the fact that rents have gone up so much. I see nothing to change the old British habit of wanting to buy a house, whatever the cost. And when plans to increase housing supply invariably don't materialise, usually what happens is the government try another tax, such as making it easier to get a mortgage, encouraging bigger mortgages, there's already been talk of a return to 100% mortgages and mortgages 6 times income. To actually get a house crash, we would need one of two things: a very deep recession with unemployment rising to 10%. Now, you could argue there is a possibility this could actually happen. US stock markets are overvalued and a stock crash would have a knock-on effect to the financial system, but it's still not a nail-on certainty. The second thing is a return to very high inflation and a big rise in interest rates like we saw in 2022. But with economic growth really very weak, it would require some kind of major geopolitical crisis, a surge in oil prices, and the end of the pandemic-style supply bottleneck. But basically, at the moment, there's nothing to cause a mass sell-off of house prices like in 1991, when repossessions went through the roof, with interest rates reaching 15%, or the credit crunch of 2007. Yet, even if a crash is not on the horizon, there's still limited room for house price growth. Real income is only forecast to rise very slowly, and prices do remain pretty unaffordable. Landlords also face higher property taxes from April 2027, and that's on top of all the new regulations and taxes, which is causing many to leave the market. The era of a buy-to-let boom does seem to be definitely over, even if bigger corporate landlords are trying to get into the market. And in fact, are British house prices been bought up by foreign investors? This video looks at who is buying up Britain, but do let me know what you think is going to happen to house prices in the UK. Is it a good time to buy? Let me know in the comments.